This is Kenny Tan. Welcome to Real Estate License in 14 Weeks. This is episode 27 of Starting from Zero. We continue to talk about Chapter 7 and complete Chapter 7 today. If you like my video, please give me a thumbs up, subscribe to my channel, hit the bell for future notification of new releases of videos, and then share this video with your friend. Real estate fund. Real estate fund is a source of money that can be used to compensate for consumers that has been defrauded by a real estate agent. A consumer who has been defrauded by a real estate agent must first go to court, sue the real estate agent, get a judgment, and try to collect on the judgment. After many attempts to collect on the judgment, it is realized that the real estate agent really has no money and it is judgment proof. In that case, the consumer can apply to the Department of Real Estate to satisfy the judgment using the real estate fund. So the real estate fund is actually money that is set aside for each real estate licensee in the case where the licensee may have committed fraud against the consumer. So for each claim that the consumer makes on the real estate fund, the maximum that the consumer can get is $50,000. However, there is also a $50,000 per transaction for all the claimants. So to give you an example, let's say a real estate agent defrauded one consumer in a transaction and the consumer recovered $60,000 in a judgment. Now, because the maximum that a consumer can recover is $60,000 from the fund, so even though the consumer is not able to satisfy the remaining $10,000 from the $60,000 judgment, that is all the consumer can collect. Now, what if a real estate agent defrauded a husband and wife? Now, if let's say, for example, the claim amount is $60,000, maximum that each person can recover in this case is $25,000 because the maximum for each transaction is $50,000. Let's say the agent committed fraud against 5 persons in a transaction. And in that case, the maximum that each person can collect is $10,000, assuming that they all recover the same amount of money they all get the same amount of money for the judgment against the agent. However, if the consumers recover unequal judgment amount, let's say, for example, one consumer recovered got a judgment for $10,000, the other consumer got a judgment for $60,000. If you combine the two, it's $70,000, and $50,000 is obviously not enough to pay both of them. Now, in that case, you will prorate the recovery by each claimant. So for the one that recovers $60,000, you prorate 6/7 of the $50,000 to the one that recovers $60,000, and you prorate 1/7 to the one that recovers only $10,000. However, what if you have a really crooked real estate agent who goes around defrauding people? Will there be unlimited amount of money to compensate, to pay each claimant? No, because there is a lifetime maximum of $250,000. Now, let's say a particular agent committed fraud against 6 groups of people in 6 different transactions. It's first come, first served. Number 6 will be out of luck if the $250,000 has been paid out to the first 5 transactions. So if you are number 6, you don't have any money left to recover your judgment on. Continuing education for renewal of a salesperson license. If you're a salesperson, every 4 years you have to renew your license. Before they allow you to renew your license, you have to complete 45 hours of continuing education. Of the 45 hours, 3 hours must include ethics, agency, trust fund handling, risk management, and supervision of a real estate office. The 45 hours must also include 18 hours of consumer protection. Membership with the National Association of Realtors. A real estate agent must belong to the National Association of Realtors in order to have the trade name realtor. You cannot call yourself a realtor even if you are licensed by the Department of Real Estate until you become a member of the NAR. Trust fund. What is trust fund? Trust fund is money or thing of value that an agent receives on behalf of a principal or any other person in the performing of services that require a license, and that money or thing of value did not belong to the agent. That's why we call it a trust fund. Trust funds include uncashed check. So if you receive a check from a tenant that is made out to the property owner, the landlord, and you're just acting as an agent for the landlord, that uncashed check is actually a trust fund. Also, cash is also considered trust fund if it does not belong to you. For example, so instead of writing you a check, a tenant actually pays the rent in the form of a cash. That cash does not belong to the agent, belongs to the landlord, and therefore cash can be a trust fund as well. And finally, if you receive some form of advance fees are fees that you received from a consumer before you have performed services or before you have completed your services. We call it advance fees. Advance fees are considered to be trust funds and must be deposited into the trust account. Who can withdraw money from the trust fund? Number one, any salesperson that is licensed by the broker, that is authorized by the broker to withdraw money. Number two, corporate officer of a corporate broker can withdraw money from the trust fund even though the corporate officer is not licensed. Number three, if a broker wants to authorize the secretary to withdraw money from the trust fund, that secretary would have to be bonded. As you know, most brokers in their right mind would not pay for the bond to allow the secretary to withdraw funds from the trust account, even though the law allows him to do that, but it's actually not very practical. There are two types of money in the trust fund that may belong to the broker. Number one, a broker may be allowed up to a maximum of $200 personal funds in the trust fund, because the $200 is used to pay for bank charges. Because if you don't have some of the brokers' own money in the trust fund, and if the bank start charging the account for bank service charges, the bank might be tapping into the consumer's money. So the broker must put enough money in the trust account to pay for those expenses. That's why the law allows a broker to have a maximum of $200 of his own money in the trust account. And also, a broker cannot leave any earned income, such as commission, in the trust fund for more than 25 days. 25 days is the maximum amount of time a broker can leave the earned commission in the trust fund. So if you, let's say for example, you deposited the tenant's check into the trust fund because it actually belongs into the trust account, because the money actually belongs to the landlord, but the landlord has to pay you the management fee. The management fee will be considered earned income. So after the money is deposited, you have to write yourself a check for the management fee no later than 25 days after the money has been in account. There's also one very important exam question. It has to do with how quickly or how soon a broker must deposit trust fund into the trust account. The broker has a maximum of 3 business days. It's not calendars, it's 3 business days to deposit any trust fund that comes into his possession into the trust account. How long does a broker have to keep trust fund records? The broker must keep all the trust fund records, including canceled checks, and those records must be kept for no less than 3 years. Reconciliation of the bank account. The bank account has to be reconciliated every 30 days. What does reconciliation mean? It means that every single check that went out and every deposit that is made into account must be balanced such that you know where the money came in from and where the money went out to. And the reconciliation must be accurate to as little as 1 dime, 10 cents. And the reconciliation must be for no less than once a month. This is an exam question. If you do the reconciliation and then there is a certain amount of money, you don't know where the money or who owns the money or to whom the money should be distributed to? What is your required course of action? Under the DRE rule, in that case, you're required to leave the money in the trust account. You're not supposed to withdraw that money. You don't know who owns that money. So your job will be to leave the money in the trust account, and in the meantime, actively find out who owns that money. Now, let's say, for example, you reconcile the account, you realize that there was a $50 for which you can't account. You don't know who owns that $50. So in that case, you leave that $50 in the account and find out who owns that $50. I have mentioned about commingling in the past. So if you have money, trust fund that comes into your possession, within 3 days, you must do something about that money. You must either deposit the money into the trust account, or you must give that money to whoever that owns that money. And if you must do so within 3 business days, otherwise it's considered to be commingling. Next, we're going to talk about mobile home. Your real estate license, your salesperson license allows you to sell mobile home just as long as the mobile home is located within a mobile home park. If the mobile home is not located within the mobile home park, you cannot use your salesperson license or broker license to sell that mobile home. Let's say, for example, the mobile home is actually located or parked in a parking lot, not in a mobile home park. In that case, your license cannot be used to represent a seller for the sale of that mobile home. This is the end of episode 27. See you next time.